Welcome back to the morning show here on Arise News. In an apparent boost for the economic reforms of the Tinubu administration, the United States government, through the U.S. Agency for International Development, USAID, mission in Nigeria and U.S. Prosper Africa and Power Africa Initiative, is hosting a roadshow from October 9 to 13 to expose U.S. investors to opportunities and the investment ecosystem in Nigeria. A statement by the United States Diplomatic Mission to Nigeria Public Affairs Section said 12 executives from leading U.S. pension funds and financial service providers managing over $1 trillion in assets will meet with Nigerian companies and fund managers during the investors' trip. The roadshow is expected to raise awareness around investment opportunities in Nigeria, particularly in infrastructure, and build relationships among U.S. and African investors and fund managers. Joining us now to discuss this new interesting economic development is Professor Adi Bongo, Professor of Economics, Lagos Business School, Lagos. Good morning, Professor Bongo, and welcome to the morning show.
Good morning, and thank you for having me.
Prof, it's good to see you again. Well, tell us about this roadshow and why it is significant. But I guess it's not so surprising because in the last MBS report on capital importation, the U.S. alone accounted for the lion's share with about 26.39%. So, but, you know, what's significant about this roadshow?
Thank you very much, Dr. Bati. Yeah, I think that's a heartwarming news that we are going to be hosting such a roadshow, of course, to bring up investment opportunities, showcase our investment opportunities to the U.S. investors. Yes, but, you know, the signals seem to be ambiguous in the sense that, you know, I mean, having such a roadshow in Nigeria, having that caliber of investors controlling such huge AUM, asset under management, coming to Nigeria, that's a great thing because, of course, you know the situation the country is in, you know our fiscal situation, then the fact that government can no longer you know, adequately provide for infrastructure or any public service, so to speak. So, and then it is also one of the core pillars of the current administration to lead a private sector competitive market economy. So there is no better way to start that than to have such a, you know, to attract such kind of investors into our system. It will do us a whole lot of good, definitely, even as we speak. You know that one of the tragedies of the last administration is that they succeeded in dismantling all the framework that had been put in place for attracting private sector investment. I mean, you will agree with me that under the 8 years of Buhari administration, we didn't manage to really close any significant public-private partnership investment in any infrastructure. So because government went all out, you know, took back the commanding height of the economy and then trying to provide for everything. And of course, we know how that ended up. So today, what we have is a landscape where there are no clear framework about infrastructure, about engaging the private sector. So I think the first priority and the first point of call for the administration would be to rebuild the framework that will attract such kind of investment. So, you know, so in terms of sequencing, that's why I said the signal seems to be ambiguous. And I mean, regarding whether we can, you know, successfully attract such and retain such investment, I'm not that optimistic because you have to look at quite a number of things. Okay, you have to look at the investment conditions in Nigeria. I mean, any business, any person, any organization, any firm that wants to start a new business line, the first thing to do is to conduct your business plan. You have to produce a good business plan, and then a core component of a business plan is the feasibility study. So what is feasibility analysis? So you have to look at, okay, do you have the demand profile? If you build the whatever, if you provide the service, will you be paid? So you have to do, proper market sounding. So in our own case, I suppose that any investor who wants to come into Nigeria will first of all conduct his market entry research, and then market entry research will definitely reveal the high risk, prevalent in the Nigerian business ecosystem. Those who are operating here, that businesses are closing up because of the very, very challenging macroeconomic environment. Which, as you and I know, that even now, none of those things have been effectively addressed. And while we are celebrating this, it is important for us to really, because investment is actually a hard-nosed, brute fact thing. So it's not propaganda, neither is it politics. So yeah, you can celebrate that you are attracting those investors, but we have to look at the conditions that we, operating at home to see whether that will eventually translate to having the much needed foreign, whether portfolio or direct investment in the country. But as it is right now, government, the current administration is challenged on many fronts. When you talk about investment, investment works with perception. Investment works with perception of risk. And then the biggest of it is, this scandalous, challenge of reputation that is bugging the Tinubu presidency. And I think that, again, you are dealing with the United States, where the rule of law is paramount, where integrity, of course, formal integrity of the public sector is enshrined, and then businesses coming from there tend to play by that. So when you put all this into perspective, then your guess would be as good as mine, whether we'll have an effective translation of the roadshow to real, whether portfolio investment or foreign direct investment.
All right. Well, Professor Bongo, correct me if I'm wrong, you don't sound very enthused about this roadshow, especially at a time like this, even though, as you said, it is an exciting opportunity for Nigeria. And I think he addresses one of the things that we have talked about a number of times on the show, whereby it's great to find out that it's being hosted here in Nigeria, not that we're going abroad to, to a roadshow organized to strengthen trade relationships between both countries, and we are asked, or Africa is asked to come over to the US or to another country in the West to attract investors. I think that's a plus, that's a win for us. I hear your concerns, and so I have two questions. The first is this good timing? I want to be optimistic about this because, like you've mentioned, we do need those foreign investments. We do need them at this time. Is it wrong timing? Number two, despite the timing, looking at it objectively and optimistically, how can we maximize the roadshow, which starts on the 9th to the 13th, despite some of the concerns we've already shared? They are real. They are not, you've spoken correctly in many ways, but how can we maximize this roadshow despite some of those challenges?
It's often said that investment, especially of the foreign type, is a coward. Okay, so it doesn't take much to scare them away. And in our own environment, we have to face the fact. No, I don't take anything away. Nobody can take anything away from that achievement of getting the Americans to host the roadshow in Nigeria. They could have gone to Kenya, South Africa, or Botswana, or even Rwanda. So that they chose us is a very big plus. Okay, so well, we can celebrate that, but I want to go beyond that so that we we don't really fall to this whole nominal excitement. Okay, so the fact remains that we are not an attractive investment destination as it is today. So if you ask me, you're talking about timing. I think it's a poor timing, right? This is not what I would expect. First of all, you will expect that the government will put the building block. You have to get your home in order, right? So before you now begin to lobby for whatever investment that you want. Because there are certain, I mentioned that as an investor, you want to go into a new environment. The first thing you do is a market entry research. So market entry research, asking key basic questions. I understand some of the macroeconomic concerns seem to be receiving attention. One of them is the exchange rate. Then I know that we'll soon, approach devaluation, full devaluation of the naira. So, which is what investors are very enthused about. But then we have to look at so many other things. So it's not just about investment. So when you're talking about infrastructure, you also have to look at human capital. Okay, so you need human capital. You need the people who will man those investments. Now we have a situation which is a very worrying one, very concerning, and I mean, I don't know why people are not even talking much about it, which is that our best and brightest are living in their droves, in their numbers. So one of the things that will attract any business in Nigeria will be our population, right? But then when you look at governments, the government antecedents towards respect for contracts, that is nothing to write home about. Okay, so we know that our government is not known for being a respecter of contracts. So, and then that has to do with the legal framework around partnership, the legal framework around investment, and of course, which again harks back on the judiciary. You know how it is. So I wouldn't, be rehashing the obvious. So people will look at antecedents. Any investor will look at our antecedents to now calibrate whether they are going to stay or not. And that's what I want to look at the real issues, not that they are coming to do a roadshow. So after the roadshow, what next? So what next would be that, okay, we have signed contracts. We have them commit to some. So eventually, we're talking about public-private partnership here, because these are private investors who are taking their capital to new climes. They want assurance. They want confidence, okay, in the economy. Right now, the government of the day exudes none of those, okay. And then the legal framework that would guarantee that these people can take out their investment or do their business legitimately, and then when they want to go, they can exit confidently. Those things have not been fully addressed. And unless that is done, this remains what it is. It will be a roadshow. So that's where I am at the moment.
Okay. So let's talk about even industries that we might have quick wins on when this happens. And secondly, the issue of our Forex. Let's talk about those areas quickly.
Well, yeah, so you're talking about Forex. That is bringing, one of the biggest challenge that we have with the Forex market today is the supply side. Okay, the Forex is not there. But then investors are not charitable organizations. They are not going to do you, it's not CSR. So now coming here, they will not come to give you the Forex that you don't have so that you can bridge the gap that you have in the market. So they will want to invest. Okay, so and they will follow the strict market conditions for such kind of investment, which is you're either going to float some new papers in terms of bonds that they're going to buy, right? And then we know what is going on right now. So everywhere in the world, investment has become a scarce, investable capital has become a scarce commodity. Just last year, earlier this year actually, we were looking at the inversion of the yield curve. Okay, so which is a precursor to recession in the U.S. economy and the rest of the world. And then we have a slow growth specter pervading all over the global economy, so that there is strict competition for investment. And then in terms of default risk, sovereign default risk, Nigeria features prominently, on that, even though we are not as bad. I mean, I had seen that earlier this year. So it's no surprise that Ghana is where it is today because they were actually on top of that. Sri Lanka, Ghana, Ecuador, and some other countries. Nigeria came out of 50 countries. I think we were about 27. But then, again, the macroeconomic situations have shifted since then to that point where we have actually climbed up in the sense that the sovereign risk default for Nigeria has increased. Okay, so these are the core things that we need to be looking at, and any investor will consider this significantly. So, talking about Forex, I just don't want to look at the player to the gallery without analyzing the core issues. If they're going to bring Forex, you have to give them some assurance that you will pay them back sometime in the future, which is they are lending you money, okay, which is no different from the so-called Eurobond. All right, so if you give them papers, commercial papers, and then they commit that they will give you this, at what interest rates? So you have to look at that. You have to compare that to the rest of the world. Is it not better for them to put their money in more stable climes like the United States, put it in the US papers, even though there is an inversion of the yield curve and other places, than to put it in Naira, which is fleeting, like a quicksand. So when you consider all this, then the question would be, where do we go from here? Would this give us exactly what we want? I think there is this homework that we need to do, which we have not done, which is to look at our economy, okay? And then if you look at the trajectory of economic growth over the past few years from the Buhari administration, so what we've had, simply if we've, whether it's 1.9% or 2% growth, which the economy averaged in the 8 years of the Western Buhari years, what we achieved was no more than a nominal growth. The sectors that grew were not the real sector, okay? Oil and gas is still in recession, which is our core sector that when you talk about foreign exchange, that is the foreign exchange earner for Nigeria. Then you have the banks, which is just a nominal sector. Even if they are going to bring, let's say they are charitable organizations, they want to set up banks or bring their money into the market. What is would they do is to create liquidity issues, and then you have an inflationary bout again. So is that exactly what you want? So we haven't rebuilt the assets that we need. That's the infrastructure. Now, so they want investment in infrastructure. Again, that should happen. I think that is what I find interesting in this. But then for that to happen, you have to look at the government credibility now, in the past, and going into the future. Then to talk about government credibility, you have to look at the gamut of the issues surrounding the government of the day as we speak. Now, these are not political issues. They are not just for the courts, and it's not just about the media. It's not David Hundeyin and all those guys. These are practical issues that any investor have to, these are variables that feature in a country risk analysis. And then if you bring all these things into, if you factor in all these variables into the risk profile of Nigeria, it is high. So if anybody is going to come here with any money, it's going to be asking you for a very high interest rate, which eventually may actually defeat the purpose. So, yeah, there is a homework we haven't done.
Okay, Professor Bongo, I get your point about framework, getting things right and all of that. But how about the states? What do you have to say about our various states? Again, I go back to that MBS report, National Bureau of Statistics, indicating that only about 8 states in 6 months in 2023 attracted any kind of foreign investment. And even out of those 8 states, Ondo State got investment of $200,000. Ekiti State got only $25,000 worth of foreign investment. So what is it that can be done at the state levels so that it's not just Lagos and FCT and 1 or 2 other states that attract investment? And then the other issue that I was discussing yesterday with one of your colleagues was about subsidy that we were told is gone and that is now back. So what happened to market forces? Why are these market forces so treacherous in Nigeria? Briefly, we have just about 2 minutes.
Very interesting question. First of all, I have a different reading of the market, which is an issue I will address during my inaugural lecture coming up early next year in February. So sorry that I'm using this opportunity to announce that. But, you know, the subnational level is one that has been long neglected in Nigeria's economic policy focus. You know, even you, Dr. Bati, and your team, you seem to focus more on the federal. But then where real people live, where you have the concentration of activities, you know, the population, yeah, even though, so take out Lagos, Abuja, Kano, Ibadan, yeah, so maybe on nature, you still have more than 95% or 90% of the Nigerian economy scattered all over these states. But then on those states, okay, because of the fiscal structure that we have, there is this perverse incentive which prevents them from looking inwards to develop their internal capacities, their comparative advantages. You know? So one of my friends happens to be the chief economic advisor to the Imo State government. And there is something that he's been promoting, which has to do with, you know, kindred economic empowerment and development, one kindred, one business idea. So that's the first. Although some people don't, you know, are not taking him seriously, but I think that's a very innovative way of looking at growing the subnational entities, which have been long neglected in economic policy making in Nigeria. Not that it's neglected, but because of this perverse incentive, the governors of the state, okay, I like it that the president wants to lead a private sector driven economy, but the governors will never want, they don't want to be challenged by the local government, neither do they want to be challenged by any business interests in their states. So they become like emperors. And then we have seen the consequence of that, where you do not have any states. You know, so you're talking about on those states receiving just $200,000. What is $200,000 as an entity? You know, a state, a sovereign state, you know, well, not sovereign state, but, you know, an entity of the state or government, that's all they receive as investment. That is too poor. So that tells you, again, most of the governors are not interested in growing their revenue base. They are not interested in growing their economies. They're only interested in politics and then the revenue sharing that happens at the end of every month in Abuja. If they were to be interested in growing their economy, the first thing to do is even to scope what it is that they have and then how they can begin to add value to what they have. You know, some of this thinking started during the Jonathan administration under the current, the president of, when Adewumi Adesina was the minister, right? So he actually invested in the development of value chains.
Professor Bongo?
And value chains across the nations.
Prof?
Yes, yes, Dr. Bati.
Well, we seem to have run out of time, but we'd like to thank you very much. And we look forward to your inaugural lecture where you will tell us your view of the market. Thank you very much indeed.